We've got the Clarity Act, proposed to go to the floor in the next 30 days here. It's on the docket at least, so we may see that voted on in the Senate in the not too distant future. They're on an aggressive timeline. I'm still, 95.5. I'm 95% that they don't get it through, but there is a 5% chance that we do see that regulation pass here before the midterms. We are hanging out at the high end of the range where we should see Japan step in here and do something with the currency market. We've got it touched 160 and it's come back down a little bit now. We're 159.88 over there on the yen versus the USD. Still need a little bit bigger move in oil, I think, to push that up to the point where, they're actually going to have to intervene in a meaningful way. So if we see things escalate there in the Middle East overnight or tomorrow or later next week, whenever it happens, I think that is going to be the straw that breaks the camel's back. So waiting on one more issue there. Now that we have the Strait continue to be shut down, no negotiations are happening between the U.S. and Iran. And also Iran has stated that they will start striking back harder than they are hit if people are, targeting them. So I don't think this is going to end anytime soon. I think that this is obviously going to continue to put additional pressure on Japan and the rest of the economies that acquire their energy from that region in the Middle East through the Strait of Hormuz. So I don't see it ending anytime soon. And with that being the case, I do believe that they are going to have to act and intervene in the currency market, either through one more time where they sell off treasuries, U.S. treasuries, in order to be able to devalue the dollar against the yen, or they're going to have to bite the bullet and raise interest rates. We are still waiting on the OCC to regulate stablecoins here in the U.S. I think that's the last piece. Yesterday was the final day that the Treasury, the FDIC, and FinCEN all could provide their comments to the OCC to be able to regulate the stablecoins correctly for them in the way that they want things to work. So I would expect that we are going to see, them come out, the OCC, and regulate stablecoins in the not too distant future. And once they provide that guidance, they can go ahead and Japan can raise interest rates, because at that point, we will have enough demand here domestically to be able to soak up those bonds. So I don't know that we're actually going to see that until that happens. That could also force the OCC, if it were to take place, to move quickly and go ahead and issue guidance so that we could stabilize the bond market. That is the last piece that I think needs to be in place before things unwind. Or again, it could be their hand is forced and they do it very quickly after it begins. So we'll have to see what Japan does, but we're still waiting on all those things. And that's where the market sits. You could also be seeing people exiting positions. So the additional pressure that we've seen in crypto and the stock market today could be from people realizing that the reverse carry trade is about to unwind at scale, and they are de-risking their positions and starting to unwind those positions to be able to repay that debt to the Bank of Japan before it happens. It will end up being somebody yelled fire in the theater scenario when it starts to move aggressively. Everybody will figure it out, and everybody will start liquidating positions, and it will be not good. It's going to be very volatile, and I think you're starting to see that in crypto now. Exits on Bitcoin. Who else said they sold their Bitcoin the other day? Like a lot of larger people that I've seen on Twitter are starting to actually become concerned with the cycle. So I did tell you guys this time was different. It is different. The ETFs and the sell volume and the pressure from those, unless you have a micro strategy or somebody else in the DAT side, retail is not going to be able to buy up enough Bitcoin to be able to stop the onslaught from the ETFs. All of the liquidity is still in the ETFs for Bitcoin. So if we continue to see downside pressure there, I would not be surprised to see $20,000 Bitcoin in the not too distant future. So is there volatility between here and there? Absolutely. But that's kind of my target, where I think the low end of Bitcoin is for this cycle before we see any upside. And then, again, not to say it couldn't go up 5 or 10%, but I think it will continue down to those levels in the not too distant future. So that's where my mind's at. Hopefully that gives you guys some insight. I always try to start this stuff with macroeconomics. I should probably list my disclaimer. And then again, appreciate you guys taking time out